Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005, still alive in 2026. Okay, today, OPEX week over. OPEX week over, and as we discussed yesterday, this is a heavy market and it played out today on Friday, the 17th of July. Options expiry, a lot of volume was happening, and we had a gap down. Okay, we'll talk about the implications of today. We'll talk about where I see this market going, the trades that we did, and we also did a new trade today. And basically, my outlook going forward after the options expiry is over, and given the nature and dynamics of this market under the hood. Okay, so let's talk about the technical picture first, guys. We're consolidating at highs. Let's bring in the moving averages. Oh, below the 50. We can't say we're bullish anymore, technically speaking, even though it's just the first day. So we're just going to say we're hovering at the top in a neutral formation, but nothing has broken. Okay, nothing is really broken. If you look at this market, it's chopping around. Okay. So because we're technically below the 50, even though, it's just a line, it's close enough, but let's say officially we're back into neutral territory. Okay. What does the sentiment say? Sentiment says we're still in fear, even worse. Okay. Remember, we were saying like, even we were at highs yesterday, the sentiment is so negative that we could drop to the bottom of this consolidation range and get into extreme fear. That's very, very good. Okay, a small drop will get us to extreme fear, which means a lot of people will be buying puts. And look, they're already been buying puts. Everything here, look, puts are at fear. Market volatility is a thing that's neutral. Everybody's still at fear and extreme fear across the board. Okay, so you have the fear palpable at highs, boom, market down. Okay, even though the market recovered a bit, it gave up. Okay, so we could have this downward move to the lows and undercut them. That would be great. We'll get into real extreme fear going forward. Okay, but the sentiment is still bullish. I like it because it's contrarian. Okay, and it doesn't mean we can't go lower. I would love to go lower. Okay, I'll tell you why later, because we closed a lot of our trades today. Okay, a lot of bullish trades that were long in the short-term type trades. For a swing trader like myself, short-term could be anything from a week to 3 days to like 2 weeks, let's say. Okay, so our short trades have closed, so we're happy. Okay, and the sentiment is going to help us down the line. Okay, and yesterday, guys, I forgot to tell you that we did get the AAII Investor Sentiment Survey. I didn't bring it up, but look, okay, we're starting to get the bulls back. Okay, maybe. Look, it's pretty much bears are still average and bulls are above average considering the historical averages here. We're at 44.9% bullish, big jump, and a small drop in the bearish sentiment. So we're starting to get the bulls. However, I don't think it's solidified. Okay, if we get the market down next week, remember it came out Thursday. If we have a couple more down days, you're going to see how weak this bullish sentiment is going to drop back down to like this. It's going to be like 2 weeks ago where one small move down in the market, like 2-3%, we're going to get the bears out, bulls back down into their hole. Okay, this is why we still have a lot of negative sentiment at the highs. Okay, and that's going to help us going forward as bulls, because the drops will probably be more mitigated. Okay, and we also had a macro print. We had initial claims on Thursday, and guess what? Muted, nothing, 208,000. So again, everything under the hood is okay. Nothing breaking up, nothing getting destroyed, except you do have like anecdotal sentiment out there where everybody's bearish. Okay, anecdotal sentiment, whatever. You have a lot of bears out there. Okay, so let's talk about this OPEX trade being over and what we see in the market. It's basically a reiteration of what we were suspecting. Okay, this market is weak today because guess what, guys? Semiconductors weak. Okay, on big volume market going down. Okay, if you want to bring in the moving averages, we're below the 50, so it's bearish. We broke some of these support levels. We have not a double top, but a head and shoulders, as my friend Mr. David Shepard was mentioning in the semiconductors, and broke this neckline, so we could go lower. Okay, and we suspected that because maybe the low print will be the Kospi index hitting the support level. It's down again today on Thursday. Well, we're going to see Friday today coming up. So the Kospi could be the low of the semiconductors. We don't know. Okay, we have no idea. We just know that this semiconductor move is causing a drag on the SPY, and the SPY is going to sort of hold it. It wants to go up, but it can't as long as the leading sector gets smoked and people are bailing on that space. Okay, we don't know how low it's going to go, but the moment it finds its bottom is when SPY is going to turn around with a vengeance. Okay, with a vengeance. So you have, don't forget, we have also oil, the war, and oil up today because the war continues. Okay, broke the neckline going up. Where are we on this? Our RSI basically neutral. Okay, so we'll see. It's still on a downtrend. Nothing back into this zone of the double top formation. So I don't think this oil move is going to be sustained because Trump, like we said, he's going to find ways to get out of it because he's not going to win. So my view on oil is still bearish. Okay, despite the war, we never got up above 110, 115 on the US oil. So I suspect oil continues to go down in the longer term, and that will help us. And we always now are going to keep an eye on the dollar because looks like it was going to break out to the highs. This is when maximum fear was coming in, but then it's retesting this breakout zone. It's still a retest. It really hasn't entered much inside the range. I wanted to go to 99 on the Dixie. We're at 100.75. I wanted to go to 99, okay? Because then we'll be certain that it's within this range. And when you see the dollar down, you're going to see gold up, okay? So we see gold here spasticating at the lows, trying to find a bottom. We're still not out of it yet. Yesterday, I told you we still have a lot of negativity out there. A lot of selling is still going on. Today it's a little bit of a relief, but not enough in my view. We need to have more kind of positive action. It's going to churn. It's going to feel really, really bad, okay? But it's setting up any undercut at 39.23, this blue zone, right, this blue level right here, which is the bottom here of October 2025. We mentioned it. Undercut would be nice. Okay, so we could still have, it's still weak. Okay, we're not out of the woods yet, and I think it all depends on the Dixie, which could also depend on oil. It's a double-barreled it's a double-barreled hit for gold. It's oil is up and the dollar is up. Okay, retesting the breakout zone. This is a retest. Okay, we're not out of the woods yet. Okay, so you have gold and silver approaching the zone again. This is where very close. I almost initiated. I put in short put trade at the 45 level. Okay, around here, which corresponds to the bottom of this range, and I didn't get filled. Okay, I'm waiting till it goes lower, and I'm going to enter a short put at the 45 level. I guess it's going to be, if it breaks, it's going to be between $1 to $1.50. Okay, 1 month out, 1 month expiry. So I like the approaching levels. Okay, GLD, gold is approaching levels and silver is approaching levels. If I wasn't long gold and silver, this is where we buy. This is the time to buy. And I am buying, but I say if I had no position, I'd be loading up a big position here. Okay, so we have that. That's the entire backdrop of the OPEX being over. Okay, we have all of those factors coming in. The main event is the SMH dropping, semiconductor dropping is dragging this market. Okay, could it continue? Yes, of course. Could we go lower? Yes, of course. Okay, and I would love it if we can get to the extreme fear where I can deploy more, because as we stand, this is where we stand right now on all of our trades. We're out of it. Okay, we're out of all of our trades, short-term trades, like I said, between 1 week to 1 month, or within that. Okay, I don't really day trade, but let's go over the trades that we did. NVDA, we had this option structure. We were long the 205, 215 call spread, financed by 2 short puts at 185. Okay, this was done at a credit of about $1.30, if I recall, and because it finished outside this range. It finished at 202.81. We're not going to get extra money from this. Okay, so we basically just collected the $1.30 credit per contract. Okay, so NVIDIA, successful trade. MU, okay, MU, we shorted the 700 put, it expired worthless. Beautiful, we collected the full premium of about $6, I think. Okay, and we entered it around here. So we are wrong on this trade, we're wrong on them, and we're still making money. Okay, we also did a trade on Bloom Energy. I like this stock. Okay, we were short the 190 put, it expired today, worthless. Collected the full credits even though we're wrong. Okay, We also haven't. So we closed all of our short-term trades. We also had but except we're still short Intel. We have a put for Intel. This is the only ongoing trade that we have. We were assigned an 88 short call because we did a strangle on the earnings around here in April. And we kept rolling the put higher. We collected a lot of credits. We collected about, $13.50 in credits, something like that. Our break even is 101.50-ish, okay? And we sold the 100 put. If we get assigned, if it closes underneath the 100 level, okay, by Friday, next Friday, it expires in a week, the 24th. It was a weekly option. We're going to end up getting called. Okay, so our short is going to be covered at 100, but because we have our break even is 101.50, we'll make $1.50 on the trade. A losing trade, we end up making money on it if we get called out. If we don't and it sort of closes above, it will be great because we can short another put. If in a week it closes above 100, great, we can short another put. So this is still open. This was a disaster trade. Worst case scenario ended up being okay, nothing devastating. Okay, and those are the only open trades we have. Okay, Intel, that's it. We closed all of our short-term trades, and today we entered a new one in, going back to the well. Okay, so let's get rid of this put right here. I shorted another put that expires in 2 weeks, the end of June, and it's the one. Does it move? Let's move it. 135. We shorted the 135 put and we did it for $5. Okay, and we did half a position. Why did I do half a position? Because if it ever gets to this support level, I want to do the other half. I want to probably do another half at the same level, or maybe the 100. We might get the same $5 at 100. Okay, we don't know. So I'm waiting. There could still be weakness in this market. So this is the only open position that we have. A long half position in Bloom Energy because, guys, look at this. If you go to Bloom Energy, okay, July 31st, 14 days to expiry. If you look at this is the column here, implied volatility. Look at this column, 230% implied. This is huge. Okay, we want to take advantage of these situations. Okay, and I don't mind being long at 135 or like we did it for $5. So look, it's trading at 6 to 8, so we're underwater, but I don't care because it's like I'm getting this stock at 130. Yeah, I'll take it. I'll take it and I'll play around it. Okay, so let's go back to here. I'll gladly take it at 130 and even more. I'll probably do more because it's just a half position. And if it gets even lower, beautiful. I'll do another at 100. So we're taking it at 115, let's say. Okay, so that's the only open trade we have in terms of long, and of course the Intel short. So that's it, guys. Okay, we have closed all of our short-term long positions. We are still holding our gold. Okay, we're still holding our long-term gold and silver plays because I suspect they're going to play out over years. We were, as gold and silver were rising, like silver, as we were long here, we were getting rid of some. We got rid of a quarter at 50. We got rid of a quarter at 100. So we're just holding half of a silver position, looking to build that back up and starting to. But I'm holding, and we sold some of our miners, basically 10%, some of them 15%, but still holding a vast majority of them. Okay, so I suspect that eventually we hit a low, very close to being low in gold and silver before a pop. Okay, and I think longer term, it's going to climb even higher. Okay, so we are holding our long-term positions, but our short-term positions were out, except for one, Bloom Energy, which it's very short-term. It expires in 2 weeks. Okay, so can this drop 30% plus? No, it's more than 30%. $60, yeah, 60, 70, like 40% ish. Can I drop 40% in 2 weeks? Yeah, it's possible. We'll see, but I'll gladly go long on that one. Okay, so it's getting kind of long, guys. Have a good weekend. Okay, OPEX is over. Let's see how it goes next weekend for the end of July. Let's see how the negativity and especially the SMH, where it actually settles. Because this looks like could be a short-term bottom. Huge volume on a down move. Let's see. Okay, all right, guys. Later.